Hey guys, it's Nolan from Trade and Train. We've been really busy this week, so apologies for the lack of the normal amount of YouTube videos that we send out. Yeah, very busy, including working on something called the 90-day challenge, which is really exciting. There'll be more details about that soon, but really excited about that. That's all I can say. Keep posted on any updates, the Telegram channel, emails, YouTube videos. Just keep an eye on everything, and you will be filled in with the information on that very, very soon. Right, let's dive into the charts. And I've just been actually doing some charts for the members for their watch list, which we send out at the beginning of, we send it out on the Sunday, actually, just before the market opened. But just done some charts of interest anyway. I thought I'd share some of them with you, and hopefully you'll get something from them. So, quick look at the dollar index, okay, which we can see here. Now, we are actually going to get, which is quite significant for me anyway, a weekly close by the looks of it, okay, below $92. Now, that's quite significant, okay, because it's a psychological level. It's called an even handle, big number. So the fact that we're closing below 92 could mean some more downside next week. But if we just zoom out a little bit, and I've put this line here, this little bit of support here at the 91 level, the next psychological even handle, big number, whatever you want to call it. Now, I don't know whether price is going to get there, but if it did, that could be a very, very interesting price to watch and to see if buyers come in. Now, I don't know whether any of you guys are traders, or whether you just watch these videos out of interest, but I'm presuming that some of you are traders. But if you have this is called Telegram. I'm not advertising it at all, but we use sorry, it's not Telegram, it's TradingView. Blimey, it's been a long week. It's TradingView. This is what we use to analyze the markets, okay? So if you've got TradingView and you have your DXY, dollar index chart up, you can go, if you didn't know, then you do now, you can go right click and add an alert. Okay, so this has added an alert just above that 91 level. You can actually change the exact number there if you want to. In fact, what I'm going to do is I'm going to do 91.1, so it gives me a little bit of a heads up before it actually gets to 91, assuming that it gets there. This low here, if you look up here, when I put my cursor there, the actual low was 91.011, so it wasn't quite in the 91. So you really want to be aware of whenever price, I'm going to drag it up a little bit, whenever price gets around this area, because buyers came in there, big psychological number, it was support there, resistance there. Could it become support again, and we see buyers come in? So we'll see. If it gets there, it'd be very, very interesting to see the market reaction. And then we could be looking for dollar longs. Okay, so that's a chart of interest. Although we don't actually trade ourselves, the dollar index, but we do obviously charge. It has been a long week, hasn't it? We do trade the dollar pairs, hence why we do look at the dollar index. So another chart of interest next week is Aussie USD. Now, with that USD coming into support, we've also got Aussie USD coming into resistance. As you can see, this was previous resistance here back in August 2020, and price is coming back to actually test that level, okay? And it's in this kind of rising wedge stroke triangular pattern. So just keep an eye on this one as well next week. If we do get that dollar strengthen, we may see this drop. Okay, so we may kind of bounce up and down in here. We may maybe even have a false break, but I am predicting, if you like, that we're going to see some downside on this, and then maybe next week, who knows? But I'm predicting, we're going to have a little bit of a move to the downside on this. But with any analysis, you'll have a bias, whether you're long or short, whether you think it's going to go up or down, in other words. Doesn't mean it's going to happen, but have your bias and then wait for the chart or price to actually start doing what you think it was going to do. Yeah, and then look to get into a trade. Don't just let's just say price got to 74,117, this previous high. Don't just start selling. What you want to do is actually wait to see, or to confirm that sellers come into the market on whatever time frame you are trading, whether it's the 4 hour, the daily, the 1 hour, whatever. Wait for those signs before you start getting into the market, because the market can, what's known as, bite you on the bum. So look for the relative price action, okay, to your bias. So I'll be quite interested in watching Aussie USD next week. And also we have Kiwi USD. Now this is probably one of the top of my personal watch list. Kiwi is massively overbought on a lot of the pairs. I haven't looked at them all actually, but not when I did the watch list earlier on. But there are two particular pairs I have real personal interest with. One of them is Kiwi dollar. Okay. Now you can see. Sorry, this is from the watch list that I was doing earlier. We can see price is in an uptrend at the moment. Again, it's similar to Aussie USD. It's in this kind of triangle rising wedge pattern. Okay, and we've been stalking this particular pair for quite a while now, expecting it to have a move to the downside. One of the important levels was actually 7,000 here, because that was a nice psychological number, but it's, as you can see, it's continued to push up. Now let's just drop, actually we'll go up, I should say, to the monthly time frame, and you can see I have marked out this level, which is about 0.7050, so 70.50. okay, monthly time frame. Look at this resistance here, resistance, support, resistance, support, resistance. So monthly resistance zone, and we are literally, if we're saying it's 70.50, we're literally 19 pips away at the moment, which means that this is of real interest to us at the moment. Okay, so what would you be looking for? What should you be looking for? Well, you're looking for sellers to come in. Now, whether you want to take you wait for price to get to 70.50, put your alert in, right click, alert, and then look for maybe a smaller change of cycle on the 15-minute. That's if you really want to get into it, assuming we do see sellers come in, that's if you really want to get in on the smaller time frames, because obviously the smaller the time frame you can get in, the better the reward. Okay, so you can, if you've got the time available, then you can be looking on the smaller time frames. If not, then fear not, because this could have a fairly decent move to the downside. So don't worry too much if you can't look at 15-minute time frames. You're looking for it to break out. Okay, simple, nice close below, pull back, and looking for sellers to come in again. So you're looking for an impulsive move. You're looking for price to clearly break out of this ascending wedge to make a new low. You're then looking for price to pull back to form the first lower high, and you're then looking for confirmation that sellers come into the market, and you're looking to get in then. Okay, so this one could be really nice. I'll give you I wasn't going to show you this one, but I will do it anyway because I'm in a really good mood. Kiwi CAD, very, very similar. You know, whether you want to trade both of them, that's up to you. But I mean, look at this. This looks beautiful to me. Okay, this looks beautiful to me. We have got price in this. Again, it's like a triangle, very similar. We're seeing them all over the place at the moment, but it's a kind of a squeezing pattern. I mean, this is just technically so indicative of this is going to drop. Okay, no, don't get me wrong. Like I said earlier, doesn't mean that it's going to, but the way price action is, it's at the top of this channel. Let's just say there's a high probability that this will drop to the downside, okay? But we wait for confirmation, okay? Whether you want to look for that breakout of this structure, very similar to Kiwi dollar, you know, looking to break out, pull back. Let me just draw it in for you. Impulsive move down, pull back, look for sellers, okay? Whether you see a daily close outside of the structure, you know, if you're an end of day trader, maybe you're going to wait for that daily close outside of the structure and potentially at a sell stop underneath that candle, if that's what you choose to do. I mean, let's look at some previous price action. You know, you can always do that as well to see, you know, what kind of setups this produced in the past at the top of the channel. Well, there was your first impulse down look, and there was your little pullback, and it was only a little pullback actually, and then we saw another impulse down, then we had a bigger pullback, and then we saw an impulse down, then we had this pullback, and then we saw sellers again. So, you know, we're at the top of the channel, which could lead to some kind of move like that, you know, big move. Who knows? I mean, that was roughly 432, we'll say 430 pips. So imagine, you know, 430 pip move, £10 a pip. You know, that's a lot of money, isn't it, really? And in whatever currency you're trading. So really worthwhile watching Kiwi CAD or Kiwi dollar or both. But remember, you know, if you're going to trade both, then in both pairs, you've obviously got the Kiwi dollar. So do you have rules about how much you are willing to risk on any one particular currency? Okay, because let's just say Kiwi, the Kiwi dollar doesn't weaken, and in fact it goes stronger. Well, you know, both trades will potentially be losing trades. So, you know, just have a think about that. You know, whether you want to risk 1% per trade, whether you want to take both trades and risk them at 0.5% each, just have a little think about, you know, what you're trading and how much risk you want to put on the table. The last chart I'm going to show you is gold. Let me just drag over from one of my other screens here. This is, as you can see, monthly performance heat map. So this is how the respective currencies or assets on average perform in certain months. So I'm particularly interested in gold for this section. So gold here, you can see that November is normally a negative month for gold, and we've been looking for shorts on gold if you've been following our Telegram channel. December, which we are obviously very, very close to. I think is it the 30th on what's the date today? 30th on Monday, yeah, and then we head into December. So we've only got one more trading day in November on Monday. So we can see in December, I should say, on average, gold appreciates by 0.93% on average, and then in January 2.74. So if gold starts to, on average, appreciate in December and then really make some decent moves in January, then we should start looking for buy setups on gold, in December, and then hopefully keeping those longs, keeping those buy trades going through into January as well, and potentially look into February and be out of them by March, where on average we start to see a decrease. Now, this is the same with silver as well. If you look, a lot of the precious metals really do well over the winter period. We've got silver there. Look, it's down in November, appreciates in December, or starts. Actually, that silver actually starts more, appreciates more on average in December. And then look at January, that's 4.22%. So, this is some really good information that we're giving you for free. I hope you appreciate it. So, potentially, longs for gold and silver in December and January and potentially February, but we need to see the setups and we need to see buyers actually coming into the market. We don't just buy because we have a heat map that says we should be doing that. We need to see buyers come in. So I'm going to show you the gold chart. I'm going to show you why it's of interest to us at the moment. Now, going back to 2012, end of 2011, 2012, we had these highs here, around about 1780 to 1795. Resistance, very, very strong level, and you can see price tried to break these levels several times on this weekly chart and failed and just broke to the downside. Well, let's move to the right. Now, this was when the SHIT hit the fan in March, when the height of the pandemic and COVID was all over the news. The markets were in huge panic mode, and this we actually saw the markets buy gold and take the price into all-time highs, up into, what did we get to? 2075. So all-time highs on gold. Now, looking at the current price action, we are actually retesting now those previous highs. So, if you know anything about trading, we look for breaks of support and retest, or breaks of resistance and retest. So this is a break of resistance here, and now we are retesting it for the first time. Okay, so what we often see is, old resistance becomes new support. So we would expect to see gold pull into this level, which it's doing, and we'd expect to see buyers come in. Doesn't mean it's going to do that, but that's what we would expect. So price is at previous resistance, even though it's back to 2012, 2011. This is the first time it's actually tested it. So we also have the knowledge that in December, we start to see the price of gold appreciate. Okay, so we've got two confluences there why we should be interested in looking for gold longs, okay, and not gold shorts. So what I would suggest is you start to look for price to make higher highs and higher lows. Maybe on, this is the 4-hour time frame. You could use the 4-hour time frame. Okay, can you see the impulse, correction, impulse there, correction, impulse, correction, impulse. You want to see this change trend, okay? Here's your swing highs, swing high there, swing high, swing high, swing high. So you want to see this swing high broken. On a 4-hour chart, you're looking for something like this. Okay, and then here, you're looking for your buy signal. You're looking for a buyer candle, whatever you're looking for. Engulfing buyer bar, hammer candle, morning star pattern. There's lots of different things you could be looking for here, but that's what you're looking for. You're looking for that high and first higher low, that change of cycle, looking to get in. So that is around about 1818, let's say 1818 to 1820, somewhere around there. Looking for a nice clear break above, close above, pull back, retest, looking for buyers to come in. And then I mean, personally, I wouldn't really set a target, because we have that confluence. If we bring back the heat map, that on average, you know, price appreciates in value through December, and remember in January and February. For me, I'd be looking to close the trade somewhere in February. You know, I wouldn't necessarily set a target, but there's an option to what's called trail your stop loss, okay, with price. So if price keeps making higher highs, higher lows, so let's just say, I mean, I don't know whether we'll do that, but let's just say we do that, etc. We get a nice uptrend going on. Well, all you've got to do is, let's say this was your stop loss, is trail your stop loss underneath the swing lows, okay? And then you can you'll get stopped out if price pulls down and makes a new low, breaks the swing low, or you may get to a big level, you know, like 2000. Let's just say got to 2000, big psychological level. We may start to see sellers come in then, but there's a couple of options here. The main thing is that we get into the trade assuming that we have the correct price action and the right setup, and then it could be a case of just riding that that gold wave, if you like, through January and February, potentially coming out at the end of February or somewhere around that time. So guys, that's it from me. I really hope you found all of what I said today interesting. So, you know, potentially there's some really good trade setups at the moment, which can lead to some really good moves. You know, if we can get into, you know, any of those Kiwi pairs, if they give us the right price action, gold as well, you know, they could be trades where you'll be sitting in those throughout Christmas, maybe even January, February. And, you know, fingers crossed, you know, you just sit there and you know, just count those pips. So we'll see anyway. You know, trading is a funny old game because the markets are random, unfortunately. We just have to kind of stack up the probabilities and, you know, and take the trade, because that's what we're here to do. But, you know, we look for the signs and then we look to get into the trade. We look for the right signs, I should say. So that's it from me, Nolan, and the Trade and Train team this week. If you're not a member of our free Telegram channel, make sure you join that. I will put a link in the comments for you. And yeah, have a great weekend, guys. And we'll see you again in our next video next week. Catch you later. Bye.